Our last qualitative characteristic is understandability. A definition of understandability means that all the information you have in your accounting reports must be understandable, which actually means the person reading it or the user can comprehend its meaning easily. Now, you can assume a reasonable knowledge of business and economics in that. It doesn't mean excluding complex information, but basically it means explaining it in a manner that a user with a low to reasonable knowledge of accounting will comprehend. So look, what's our actual definition? You can simplify it to information is understandable if the user can comprehend its meaning easily. The rest of the information there just being some background info. So practically, what does that mean? Well, you want to avoid jargon and excessively complex terms. If you listed the following in your reports, would the average person know what it is? What is EBITDA? Do you even know what it stands for? And more importantly, what does that number represent? What about amortization? That's a very uncommon word to use in the English language. I doubt the average person is going to understand what that number would mean. And also goodwill, which is a type of asset. Where possible, use simple language that is easily understood. So if you are going to use the terms above, at least provide an explanation, maybe an asterisk, and down the bottom, break it down and tell someone what it means. Another way you can do it to achieve understandability is use headings and formatting. That'll make sure information is clear and readable. So for example, here's an income statement that is set out terribly. We've got our revenues on the top, our sales, we've got our expenses, our rent and wages and so on. And then determining profit is quite difficult there. Look, all the information you need is there. There's nothing wrong with it from a, is it complete standpoint? It actually is. But what we do in reality is we use headings and formatting to set this out in a much more understandable fashion. So we list one section of revenues with a nice total. Then we list our expenses all individually and with a total. And that allows us to easily calculate a net profit. Another example is to use graphs and charts. So while the income statement there is good, it's much better than the one we had before. We can actually turn that into graphs. For example, revenues, where do all our sales come from? Or we can represent that as a pie chart, which tells us that 45% of our sales come from clothing, 41% from footwear, and 14% from sales equipment. So just looking at the report before, that's not readily available information, and it's much easier to read in a graph. Here's a representation of our expenses. We can see our expenses are $80,000, and this graph shows us what the major expense is. It's wages. You can see that that represents $30,000, then rent, then electricity, and so on. So I think expressing things in graphs and charts where possible is a great way to make financial information more understandable.